Unrivaled Nation, we have breaking news in the world of e-commerce as Coupang, the leading e-commerce player in South Korea, is acquiring the business and assets of Farfetch, another publicly traded e-commerce company focusing on the luxury market. Farfetch is going to receive $500 million in capital from Coupang, which is really interesting because Farfetch was previously a Wall Street darling with over a $20 billion market cap. So previously, investors were saying, hey, this business has a lot of value, tremendous upside potential, $20 billion valuation. Now, Coupang is buying this business through a loan of $500 million. I previously did a video on Farfetch, because a lot of investors have asked me about it. And I said it was just too hard. Despite their talks about a business transformation, they build themselves as a leading luxury e-commerce platform, both selling branded goods, goods where they owned or took inventory, as well as helping other platforms or helping other companies sell their goods. So as a first party, as well as a third party provider, looking at the details of this agreement with Coupang, they effectively reached a deal not only with Farfetch, but also the holders of over 80% of a $600 million term loan. So a senior term loan that Farfetch, effectively money that Farfetch has borrowed, and saying, hey, these lenders also want to get some sort of payout. These lenders are concerned that they're going to ever get their money. They're looking at a company with real cash burn. And so this is a bridge loan at 12.5%. effectively to do some sort of bankruptcy process. So it's a prepackaged bankruptcy where JP Morgan is going to be acting on behalf of Farfetch to sell these assets. And effectively, this is going to be the senior claim. This is going to be the senior financing to get this deal done. What investors in Farfetch should think about is that this is likely a donut. You're not going to get a recovery because in all likelihood, this is a deal where the lenders are looking to get some sort of partial recovery, $600 million facility, looking at $500 million in capital coming in. If the senior lenders don't get paid, then junior and equity certainly doesn't. And so in all likelihood, you're looking at a donut for all the junior and equity holders. I think there are huge lessons here that investors should reflect on, as they consider looking at what's gone on with Farfetch, previously a $20 billion valuation, now effectively getting taken out back at a $500 million loan. First of all, this is not financial advice. Also, quick plug, take charge of your investment journey at unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscribers. I expect the rate to go up at the end of this year, so now's the time to lock it in. Looking at Farfetch through the lens of AI Ticker Chat. And this is one of the reasons why I love using AI Ticker Chat. First month is free, is you can ask it about, hey, what do you think about the range of possibilities for this stock? And Farfetch caused AI Ticker Chat to completely short circuit, saying like, hey, there's hundreds of percent downside. Obviously, you can't get something that's hundreds of percent downside. You can only go down 100%. But it does reflect that this company was in such dire straits that it just couldn't project a favorable outcome for it. So it is a helpful data point for me personally as I go through my portfolio, ask each company, through the lens of AI, what do you think of this business? And if it's a different range than I expect, I should be able to say, oh, okay, well, it's because I have a different growth assumption, or I think my margins are going to be different. So it's a starting point to say, okay, well, what are you getting wrong in terms of, thinking about this company? And clearly, Farfetch just caused AI Ticker Chat and Finney, the AI, just to short circuit and say, man, this company is so bad. And let's go through some of the financials, because I think there's some key lessons investors should get from this. And so this financial page is actually now completely free to users at aitickerchat.com under fundamentals, completely free to access this. So it shows their operating margin. This is Farfetch operating margin over time. This shows you this company never was anywhere even close to profitable. Even in recent years, you're talking about, 20, 30% negative operating margin. That's a huge problem, especially as you've seen their revenue growth go to effectively zero. And so this is a real big problem for a company. You can't post negative 30% margins and 0% growth. That is the world that we're living in right now. Right now, we're living in a world where you get real cash interest rates. So if you're not growing at a minimum of 5, 10%, 15%, then you need to say, hey, I have real free cash flow. I personally keep my cash at Interactive Brokers where I'm getting over 4.8%. But if you're not, getting that on a company, you need to say, well, wait a second. Are you delivering it with your profit or are you delivering it with the growth? Because if it's with neither, you have real problems. And I think in the case of Farfetch, they also reflected they were losing market share. By not growing significantly, you're saying, wait a second, you're not the only e-commerce player out there. There's lots of e-commerce players. Clearly, you're losing share. So people aren't going to your site in a compelling way. This does also get me to wonder and think more about Coupang. I do have a small teaser position in Coupang. They, like to focus on a sort of a tagline of how did I ever live without Coupang? That's what they want their customers to say, which is also what I want my businesses to say. I want each of my businesses to say we are unrivaled. Our customers say, what would we do without them? And that's part of the reason why I bought a small teaser position in Coupang. But this does get me more interested because they're, if they could turn this business around, even if it means, sales get cut in half, if they can then have those sales on a profitable basis, that could be very interesting. Looking at Coupang, they themselves, e-commerce company that, have a lot of e-commerce companies have struggled to show real profitability, real free cash flow. And that's exactly what I mean. I was talking about in this interest rate environment, you need to be setting a minimum hurdle, 4 or 5% for cash. That means you need to be getting a real yield from something else. So Coupang's saying, hey, we're delivering now. We previously were burning $1 billion. Now we generated nearly $2 billion in free cash flow in the last 12 months ending September 30th. So you can see that change, this huge change in terms of their free cash flow story. This means you're going from default dead to default alive when you're looking at this. I think another key lesson that investors should reflect on, because, everyone through a bumpy market cycle, you're going to have winners, you're going to have losers. When you look at this, I think it's important to understand, because there are some smart investors that own Farfetch or had bought along saying, hey, I like the growth trajectory. I like the potential to tap into luxury, e-commerce, having a strong brand. I understand that. And so I think this is a super important lesson on position sizing and portfolio management, where if you have a company that is a very sexy story, but it doesn't check out, and you can ask AI to go, hey, what do you think of the fundamentals? And AI goes, I'm short circuiting. Then you might want to rethink your position sizing. You might want to say, you know what? I'm going to wait until it's proving themselves with their free cash flow, where they can be in an opportunistic position like Coupang is now, where they're saying, hey, we just generated $2 billion in free cash flow. We're going to use that to provide effectively a distressed loan to this e-commerce platform where we're hoping to buy you for pennies on the dollar, because who else is going to step up? And by the way, we're going to be running these assets going forward. So it's important to reflect, because every investor is going to have losses. It's super important to understand that. I think Peter Lynch talked about something like a 60% batting average. Like that was his goal. Meaning 40% of the time he's looking at losses. Maybe you think you're at 30%. The point being is that there will always be hiccups, there will always be problems, but how you position, it, where you say, oh, okay, well, I'm going to have losses, but I'm only going to add to positions where I have high conviction they have the balance sheet to see themselves through. They have the balance sheet to survive. And adding capital when you see that conviction, oh, they're generating free cash flow. So this is an example where at this point, I hope, people weren't adding to Farfetch on the way down. Oh, it's at $10. Now it's at $5. Now it's at $1. I hope they weren't, just because each time along the way, you're looking at arguably bad execution. Wow, the cash burn was just awful. Whereas with Coupang, this is something where I'm thinking, man, I know Stanley Druckenmiller, this is one of his top positions. I see that they've proven that they can get real free cash flow. They're serious about this, the leading e-commerce player in South Korea. So I'm wanting to learn more, and I see them doing an opportunistic bet. So I will explore Coupang, I think, in the coming weeks, in my weekly letter for my subscribers at unrivaledinvesting.com. And so I just view this as very interesting development. And I hope these lessons, talking about Farfetch being acquired through a distressed loan by Coupang, has been helpful for you. Please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.